Why Nvidia? Because Jensen Huang, the smartest guy I've ever encountered, is still in charge of it, and he continues to be a force in the intellectual world. He highlighted the potential of artificial intelligence and rapid computing more than 10 years ago. He was certain that he would create incredibly quick processors that were capable of incredible feats like learning and inference. When I initially met Jensen, I was unaware of his obsession with speed, the speed required to play the newest video games. Since he co-founded the company in 1993, Intel has contemplated competing with Nvidia, but they have remained concentrated on antiquated central processing units and had no interest in graphic cards. Graphic cards ultimately possessed a great deal more computer capacity, to the extent that they are now capable of much more than just visuals. Conversely, Intel, no. But now, let's move on to the next significant market test, Nvidia's earnings. They will appear on Wednesday following the bell. I'm coming to you, Bren. Do you own Nvidia? Indeed, it isn't surprising in my opinion. If they didn't have impressive stats, it would be shocking. Jensen is a showman to be sure, but he has the goods to prove it. I believe their numbers will be enormous. This is what I've been saying all along. What are the hyperscalers doing if you listen to any of their earnings calls? They are continuing to spend and are raising capex. Additionally, we heard from AMD. They had impressive data, and I believe Lisa Su will corroborate Jensen Huang's remarks regarding the company's ongoing trajectory and expenditures, whether they come from the hyperscalers or VCs. If they had a huge beat and a higher guide, I wouldn't be shocked. I think it would be shocking if they didn't. Okay, quite startling. Josh, we were just here yesterday discussing this. You brought up the astounding revenue projections, which showed a year-over-year growth of 112% and an EPS of 125%. Earlier morning, I had a conversation with Dan Ives on my show Worldwide Exchange *. According to him, Nvidia must surpass those standards and perhaps increase guidance in addition to meeting them. Do you concur? Yes, and as I mentioned earlier, we want sales to rise by 100% or more and earnings to expand by at least 130%. And it's not impossible that they have a fantastic quarter, but the market decides to take 10% off the stock because it's 132%, not 137%. It is a high beta name with a high degree of short-term sensitivity. The good news is that Nvidia has consistently increased guidance and reported revenue and earnings per share beats for 6 consecutive quarters. This explains why the estimations are so high. However, the markets have been waiting for this corporation to make a mistake on several occasions. You have been covering higher if you have been placing bets against it following each of the previous 6 quarters. It hasn't been enjoyable. Look, that's what this name is going to do to you. Next week, the stock will be around 9% lower than its peak. It went down as much as 27% at its lowest point during the recent turbulence. Especially before earnings, that would have likely been a better time to start a new job than today. I'm not sure if I would want to do that, but I believe the stakes are high for the market as a whole. The final point is that, if you pay attention to the conference calls, Microsoft and Meta are the largest clients and their opinions are crucial. None of the hyperscalers are cutting back on their expenditures. In fact, Zuckerberg set the standard higher. I estimate that he will spend an additional $40 billion or so. If your name is long, that's good news. For the time being, their most important clients are only discussing moving forward at full speed. Josh, I get what you're saying. To reiterate, Dan Ives released the note yesterday, referring to it as the most important tech earnings in years. Speaking of how significant these earnings are for Nvidia, he continued by saying that for every dollar spent on an Nvidia GPU processor, there are $8 to $10 in multipliers across the tech sector. This speaks to our solidly bullish view of tech equities over the coming year. Kevin, I would like to include you in this discussion. Thanks to the recently introduced QVO ETF at the New York Stock Exchange, you now own Nvidia stock. Yes, Frank. We are ecstatic. Here at the NYSE's, we debuted QVO yesterday. With our partner Amplify, it completes our ETF package. In the past, Nvidia was the engine powering Tesla's innovative technology. Until the business eventually created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. For instance, some rare models have sold for hundreds of thousands of dollars, and one specific model is presently going for $199,000. Get yours now by clicking the link below. But don't delay because there isn't much left. Writing covered calls against the Russell 1000 growth is a more volatile version of the TES. As a SSMA, we have been in charge of this for 5 years. The New York Stock Exchange is currently selling it. Additionally, we launched an international version of IDO 2 years ago, along with all of these spin-offs from DVO, our flagship, and our dividend growth portfolio. Thank you, we're incredibly excited. Okay, we must now ask you, as a shareholder in Nvidia, what you think of these upcoming earnings. The bar is simply extremely high. It might have a huge effect on the rest of the tech industry. I also want to mention something we discussed yesterday. The data was processed by our CNBC data team. 10% is the implied volatility, either up or down, following earnings. Yes, since that V might go either way, we aren't writing the covered call against it. Nonetheless, this stock has the potential to keep rising. A 30% growth rate is anticipated over the following 5 years. The stock will rise if it even approaches that level of significance. To be quite honest, we've had this for 5 years, even if the ETF was only introduced yesterday. Therefore, I will not enter Nvidia and curse everyone. As you can see right here, Nvidia is on the rise today, with shares up slightly over 3%. Patrick Moorhead, founder and CEO of More Insights and Strategy, is joining us now to discuss Nvidia in greater detail. Additionally, a few weeks ago, the price was down 20%, so it appeared as though perhaps expectations might be lowered, Patrick. Since then, there has been a significant surge back toward the peaks. What do you believe Nvidia's embedded expectations are at this time? At the very least, I believe that expectations will be met, but I can see that this train is unstoppable. Since there are many elements about Nvidia that people are unaware of, I believe they will perform better than anyone could have predicted. This is really about meeting demand, and don't get me wrong, hyperscalers have a lot of demand. However, there are also new kinds of opportunities that people aren't entirely aware of. In the first place, Nvidia sells more than just chips. It sells several chips, whole systems, software, and even into the business market. These aren't being taken into account right now, in my opinion. Furthermore, it is evident from the earnings reports of some of those major platforms that their capital expenditure budgets are still rather substantial. Given that there is a perception that an urgent build-out is currently taking place, and that its duration is uncertain, I suppose there will still be some skepticism over whether that is sustainable over the long term. Yes, you are entirely correct on a multi-year basis. There must be efficiencies, effectiveness gains, and downstream benefits that software firms will provide. But most significantly, software companies will benefit enterprises and consumers. We will need to observe increases, for example, in advertising and service revenue from those indicators. I believe that investors would demand a CapEx spending freeze in the upcoming 12 to 18 months if things don't start to happen. However, I think we will all be safe for at least a year, if not more. You've heard about the ag boom and the gaming obsession, but I'm going to tell you something that nobody is discussing that might cause Nvidia's stock to soar this year. It's a covert weapon that has the potential to completely change how we use technology. I'm referring to Nvidia's possible quantum computing innovation. A paradigm leap in computing power is possible if they can figure out the solution and incorporate quantum technology into their GPUs. Imagine artificial intelligence, AI, solving issues that a conventional computer would take years to solve in a matter of seconds. Although it's a dangerous wager, there might be a huge payout. Nvidia has the skills and resources to succeed. If so, be cautious. This might serve as the impetus for their stock to surge. In the past, Nvidia was the engine powering Tesla's innovative technology. Until the business eventually created its own internal systems, these GPUs powered Tesla vehicles. These early Nvidia GPUs are now considered legendary.